Christmas, little fella?
It's Santa Claus. And it's Elf.
We're not gonna hurt you.
No. Got some nice presents for you.
Oh, hey guys, it's Paul Cabral here. My daddy gave me a lot of money and I lost it all. Wow! But of course, bro.
Welcome back to Strongman Personal Finance. We got some historic news. Paul Cabral, the genius of everything money, the long-term value investor that massively underperforms every index known to human history, including ARK, which isn't an index, has finally, supposedly, revealed his losses on shorting Nvidia stock, because nothing screams value investor more than shorting a highly volatile chip stock during an AI hype wave. So let's go ahead and react to this video that just dropped from Everything Money. And I have not watched this video. So you are getting raw. You are getting a raw, big, thick, raw reaction from Strongman Personal Finance, because that's how I like it. I love it raw. Woo! So let's go ahead and listen to this video of Paul Cabral revealing how much he lost on shorting Nvidia, which I do not recommend. All right, here he is. Here's the world famous Paul Cabral. He has 230,000 subscribers on his channel. 230,000 subs. Downvote here. These people watch Paul Cabral. They trust him. They believe him. They believe he's a true value investor. Well, guess what? We're going to see how true it actually is.
Guys, these are the biggest investing mistakes I've made in my life. The reason I'm sharing them is, one, I believe the Charlie Munger thing of put your face in your mistakes and rub it in there. And two,
oh yeah, I'll put your face in a big turd, you loser. He's gonna reveal his investment mistakes because you just gotta reveal them, bro. Put your face in them. What you're about to see, no doubt, is gonna be one of the most hilariously degenerate things you have ever seen. And after watching this video, do you believe that Paul Cabral has outperformed the market? Do you believe Paul Cabral will ever outperform the market? Do you think his lifetime total returns will ever approximate an index fund? We'll see.
you're going to learn from these things as well. Now, it doesn't mean that just because I did something wrong that you can't do it better. Absolutely not. There's tons of ways to make money out there. And the ways I've lost money can be a way that you make money. So,
see what these grifters do. This is the exact same thing Jeremy does. If he makes money on a stock, he's a genius. If he loses money on a stock or shorting, which is stupid, unlimited losses, hello, then it's just a learning mistake. Just when I mess up massively, like when I buy Tattoo Jeff, it's a learning mistake. That's exactly what this disgusting grifter is doing, okay? It's a freaking joke. What is this? Get out of here.
first and foremost, shorting. I used to believe that markets are overvalued. They'll eventually turn. Therefore, short. They're not going to last that long. 100% wrong. I was absolutely wrong on that. Guys, do I believe in shorting? Absolutely. But the thing I didn't do was...
What? He still believes in shorting? When I was an intro investor, and I still am. I mean, I just buy index funds. But I knew from the very beginning, shorting is bad. Shorting is dangerous. Shorting can open you to unlimited losses. Oh, I knew that from the very beginning. It's common sense if you know anything about finance and investing. And this clown, after getting bent over and blown out, massively blown out by a big huffing man, sweaty and hairy, he still thinks shorting is okay. Okay, small Gabriel. Okay.
I didn't have a process for that shorting. I just thought overvalued meant short, it'll eventually fall. Guys, first company I ever shorted was Facebook at $31 or $32 a share.
What's Facebook at? Meta at now? Like $500?
Hey guys, Paul Gabriel here.
It went down to 18. I exited at 21, felt like a king. Then Amazon.
Oh, he made money. Oh, this is actually good. Let's let this play a little bit.
Poop. Amazon. I was wrong on that one because I didn't see the growth and I didn't understand the numbers in there. That growth was insane. I think it was so bad, so good for Amazon. I got, well, killed on it. When I say killed, I'm being dramatic. 2, shorting the market in Nvidia.
Okay, we're getting into it. But notice, so he shorted Facebook, and apparently he made money on that. We can never verify that. But he shorted and got a victory. So he said, you know what? I'm a genius. I'm so smart. Wow, my daddy's rich. Wow. And he said, well, since I shorted and made money once, I'm going to do it again. Just like a lot of you clowns are doing with buying individual stocks. And then he does it again with Schlamazon. And guess what? He gets his butt blown out. And then what does he do after that? Well, apparently he shorts Nvidia. Okay. Let's keep watching.
Terrible idea. The euphoria was insane, and I had no process for getting in and out of that. I'm now out of both of those, and I'm happy about that. And I could have lost a lot more money. I remember thinking to myself, the second I exit this, the market's just going to plummet. It did not. I wish it had. It would have probably made me feel like, oh, crap. But at the same point, it just proves that markets can be irrational longer than I can stay solvent.
Has not everybody heard that term? Markets can stay around, or that phrase, market can stay irrational longer than you can stay solvent. That's like intro investing 101. And what does daddy's money do? Yeah, he keeps playing games because he doesn't have any consequences to losing money. You do.
Now, obviously, I'm fully solvent. I did lose money. And I just put in our community today a quote that's very relevant to this video. Your first mistake is going to be expensive. Your second mistake, if you continue to do it, is going to be financially catastrophic. That's why I ended. And that's why I've also made the commitment of I'm not going to short just because of overvaluation.
But you did make a second mistake. So you made money on shorting Facebook, even though you could have just gone long and the stock would have like 20,000x. But then you made a mistake shorting Amazon. And you make a mistake the first time. Okay, it's expensive. And then you short Nvidia. So you made a second mistake, and it was catastrophic. How many millions did you lose, Small Gabriel? Please tell your daddy. You laugh at me. You think I'm JV? I didn't lose any money shorting. Woo-wee! Daddy's portfolio's at all-time highs. Wow!
That's not the reason to short. If you want to short, learn some sort of trading method of shorting, because there are great ways of reading charts, reading momentum, reading MFIs and things like that to short a company.
No, do not short ever. Shut up.
Based on momentum. I'm all in favor of that. But my idea of shorting just on valuation was terrible. I shorted in the market to start because, and actually the funny thing is I got very lucky when I got out of my first market short at a very small loss, like literally 1% loss because of COVID crash. Completely lucky on that one. So I didn't learn my lesson. I went back in on it. And that's when I lost.
Okay, let's read this quote. The best investors make mistakes, but the very best investors learn from those mistakes. Okay, I shorted Amazon and then I lost money. Let me do it again with Nvidia. It would be far worse not to do a detailed assessment of what went wrong, such that we in that situation, you're not able to incorporate those learnings and actually continue to sort of sharpen the saw, if you will. And yet he still believes in shorting. The saw has not been sharpened. The saw is dull. The saw is limp. It's flaccid. It hasn't improved one bit. This is so hard. Investing is so hard. Max your tax advantage accounts and buy total market index funds. So hard. Oh my God.
My big money.
Let me make sure I'm sharing still. Okay, we're still sharing.
And that's where I sit there and say, okay, didn't come close to burying me. That's awesome. I lost 10 or 12% of my net worth, which is a chunk, but at the same
10 to 12% of your net worth. Brutal. Brutality. Oh, it's vicious. Oh, it hurts. 10 to 12% of you. That is catastrophic. If you lose 10%, 12% of your net worth on one short, you are a fool. You have lost years of retirement, especially if you're younger. Don't you dare listen to this degenerate clown. Ever. Do you hear me? Look at my nipples. See them, they're staring back out at you. Look at those and listen.
same point, I also made a lot of money off of selling covered calls, having higher interest charges. So it weighs itself out, the real estate. That's
no. I've got real estate, so that balances out being a crappy stock investor. But then I sell stock investing tips. What a cop out! I've got my real estate, bro.
That's why I like what I do.
I got freaking real estate.
That's the big thing I learned from it. That's why I like diversity in my investments, because not one single investment's going to make me massively rich. And that's exactly why shorting is not a good idea for me based on valuation. Now, it's funny. Tim just stopped me and said, Paul, there are people who make mistakes that cost 30 or 40% of net worth.
Hi, I'm Mike Gitt.
Oh my God, this is just this is like a humiliation ritual. But you know what? He's only gonna get more subscribers because of this video. There's already 500 likes on this video.
That's why my point was to sit there and say, listen, I didn't risk anything that was going to change my life.
10 to 12% of your portfolio shorting. If you go short, you're exposed to unlimited losses. That is risking your whole life. You could get blown the F up if you risk massive losses by shorting. Okay? Never short. Get it through your little skulls, clowns.
I risked enough where if it didn't work out, which it didn't, it taught me a great lesson. You know, back when I first started my business,
I learned the lesson by reading a quote. Wow.
My brother I made him a partner of mine because I got started from family. So I wanted to share that with my brother. And there was
You did get started from family. That's right, Paul.
time I remember thinking to myself, I was reading all these books of these successful people, and it was all brag city, brag. And I was like, man, these people don't make mistakes. And then you do more research on them, and you're like, no, they do make mistakes. They do have things that don't work out for them. So I thought to myself, that's what I'm going to do. I'm going to tell my brother all the mistakes I make. So I'd tell him like, oh, I screwed this up. And finally one day he looked at me and goes, Paul, are we broke? And I'm like, no, our net worth goes up every single year. What are you talking?
Has he asked you that recently, Paul Gabriel? Yeah, our net worth just goes up every single year. Yeah, it's so easy, bro.
Talking about? He said, well, you're always telling me the mistakes you made. Now, I don't say that to be a humble brag. I say it to say, okay, I've got to balance good with bad. Show the things I've done well. And I think on this channel, like I have 13 companies that overall are up a lot, but I don't take credit for that. Why?
Lies, boy, lies. I know what you're doing. All you do is when your stocks drop, you sell them, you tax loss harvest, and then you buy them back 30, 31 days, and you reset your cost basis so it makes it seem like you're up. I know what you're doing, bussy boy. I bet you're up in like 3 stocks. I want to see audited financial statements. I want to see an audit trail showing me that you've made money. Because all you do is talk. I'm a girl, oh my God. That's all you freaking do, loser.
Because I look at it as like, yeah, we've had a market boom in the last year, right? So I look at that going, I can't take credit for that. I want credit 10 years from now. I have people messaging me on,
You know, when I look back 10 years ago when I used to make fun of Paul Gabriel, he was actually smart to short Nvidia. What an absolute fool that strongman was. I said you should match your tax advantage accounts and buy total market index funds. What a freaking loser I am.
Twitter, Instagram all the time saying, Paul, because of you, I got out of this and that's awesome. I bought this and it's up. I'm like, hang on a second. I always respond back the same way. I appreciate it, but give me credit 5 or 10 years from now when this process has worked out.
The process has not worked out. You lost 10 to 12% of your net worth. You got utterly obliterated. You made a foolish mistake that you should have not made. Okay? This is a joke. This is a catastrophe. Everybody makes mistakes, okay? Everybody might lose a little bit of money in here. But I can tell you most people have not exposed their entire portfolio to unlimited losses. And even you, Mr. Millionaire, could have been nuked from orbit. That's right. But guess what, Paul? You can just sweep it under the rug. Oh, look at me. I'm a sweeper. Oh, I'm a cleaning lady. Oh, I can see you, boy. I can see right through you. I can see your soul, bussy.
That's the mistake I made in shorting. I didn't have a process. And
Just have a process, bro.
Will always remember that. And I'm very glad it happened to me. Another mistake I made, different business altogether, real estate. This is where I learned you need to make your own analysis and trust yourself.
Okay, he talks about real estate. Don't overpay. Does he go back into stocks? Hold on a minute. Let's go forward a little bit.
17 up to 25. And the mistake I made was I sold it at 60. I think it was like 58 or 60 because I said it's overvalued. The thing, money. He goes, no, I wouldn't buy it then. And I was like, no, you don't get it. What I'm saying is no debt. You pay 50 billion for the company and there's 100 billion in cash. You just shut the company down. You double your money. No, I wouldn't buy it then. And I was like, oh my God. He goes, you don't understand. Tech changes. It's terrible. I remember thinking to myself, this guy's an idiot. And I was buying Microsoft. I think my average basis was like 22. I started buying at 17 up to 25. And the mistake I made was I sold it at 60. I think it was like 58 or 60.
That's the problem with stock picking, okay? Even if you make money, even if you double or triple, a lot of you are going to sell. But if you just freaking held over 10, 20, 30 years, that's when you get the 20Xs and the 30Xs and the 40Xs, okay? I've been buying Microsoft too in VT since 2012, and I've never sold it. And I bet you on those shares that I originally bought, which are in VT, it's in the wrapper, I've made a lot of money. But just buy it, vertical line, sell. I'm rich. Okay.
I said it's overvalued. The thing I've learned now is, one, momentum can carry a company for a very long time as the fundamentals get better. Because now I think I would kill to have Microsoft at $60 a share. Literally, I'd kill.
Yeah, you're an idiot.
If God came down right now and said, Paul, you got to kill Nick and Tim in your studio right now, but you get Microsoft $60 a share, I'd be like, sorry, guys, you're dead.
You probably would, too.
Two, companies like Microsoft can generate a lot of profit very quickly because of their return on capital and their high gross margin. It's the Philip Fisher method of finding a great company at a good price and letting them compound on each other. That was the mistake I made. It's a different kind of mistake. It's a similar kind of mistake to shorting an overvalued market, but I did it differently by selling a company that was amazing.
No. Shorting a company and selling a company too early are two entirely different things. At least with Microsoft, you made some money. You didn't expose yourself to unlimited losses. The worst you can lose is 100%. It goes to zero. Worst case. And that's probably not going to happen. When you short, we're talking about nukes from orbit. There's a freaking satellite, and it's dropping tungsten steel rods and nukes, and it just obliterates everything it hits. That is the level of destruction that you are exposing yourself to by shorting. These are not the same thing. The degeneracy of shorting versus selling Microsoft too early. I mean, people might laugh, but it's like, okay, you still 2 or 3x. Oh my God, shorting? Nvidia? Anything? You're a clown.
Now, can I brag about saying, hey, I saw Microsoft in the high teens, low 20s and was telling people, even with the criticism? Absolutely. But then I sit there and said I sold at 58 or 60 because it was overpriced. Well, that stinks. Because right now, if I kept it, I'd have a 20 bagger in a matter of 10 years. What's that return? It's an insane return. But it was a great lesson learned. Even though I almost tripled my money, 2.5 times my money, it could have been 20 times my money with no taxes. That's the lesson I learned there. It's so important to...
Dude, and this guy is in and out of stocks all the freaking time. So apparently he learned his lesson that you should buy good companies and hold them forever, which you do in index funds, by the way. But instead of doing that, he's always buying and selling and getting out of this and buying that. These stocks go in his portfolio, then they vanish. We don't really know what's in his portfolio. When something runs up, I think Intel. Did he sell Intel? Really? Oh, wow. Yeah, Paul, you've learned your lesson.
Understand the lessons that you learn from even the money you make. Because I look at it going, I lost out on that money. The millions of dollars I would have made by just keeping that company. That was a great lesson learned. And now I only buy a company where I want to hold it for that long a period of time. So all the companies I own right now.
Oh, I can't wait to hear what he has to say about this.
For the most part, I think I've since sold one since then. And I have reasons for that. But the other ones I'm looking at going, no, I want to watch these. I mean, I have some that are up 50%. But guess what? I have no desire to sell them. Even
You're not up 50% on anything, Paul.
No, I think this market's overpriced. Because at the end of the day, I learned that lesson with Microsoft very early. And now I sit there and say, I'm not here to jump in and out of companies. Of course, you all know my Meta example, which is very similar to Microsoft. Different reason why I sold it, because I sold it because of momentum at a price that I thought it was well worth it. Another lesson learned there.
He did it again. Buy and hold an index. You have all of these companies. The losers fall away. The winners run and run and run and run and run. And over time, you make money as the world becomes wealthier. Oh my God.
Final investing mistake that I've made. This isn't really a mistake per se. The first two cost me a lot of money. The third one was just a loss of potential. This fourth one was more of a mindset. worrying about my net worth. I loved seeing my net worth go up every single year. And it's gone up every single year except for like 1 year back in 2012 or 13 when there was a fire on one of my properties. And it was just a terrible thing that occurred. Luckily, nobody got injured. There was a big financial loss for us. That's the only year my net worth, I think, went down. But worrying about my net worth was absolutely useless because then what I found myself doing was, okay, if I do this, how much can increase my net worth? Where I've shifted myself into is, if I make an investment, is this a good use of my money? And I want to watch the returns on that specific investment. At the end of the day, everything else will take care of itself. And if I have to sit on cash, great news is right now I can make 5.4% on 90-day treasuries. But I focused on the process, not the end result. Focusing on your net worth focuses on the end result. If you focus on the process,
instead of focusing on the process, you know what I focus on? How many shares of VT can I accumulate over my working life? Because when I buy, let's say I have 10,000 shares when I retire. I own X percentage of the world's companies and all of their future cash flows that get returned to me, either through share price appreciation, through reinvestments, or dividends, or share buybacks. I own X amount of shares, and I want more and more and more shares of VT. Focus on that instead of my net worth or the process. You just got to have a good process, and you can day trade. You could sell naked calls, and you could be a massive degenerate and pick stocks randomly and sell them at random prices and just be an absolute moron. This guy is a freaking clown, okay? I don't know if he actually unveils the amount he lost, but what's he doing? Big mistakes. Okay, now he's shilling somebody's book. What a stupid video. What a freaking clown this guy is. All right, let's do some comments. Sup, strong man? Did you guys enjoy that roast of Small Gabriel? Real hi. When they say everything money, they mostly focus on the losing part. I mean, like, it's almost like clown level. Like, a part of me is like, I want to be evil now. Like, I want to just like pump clown stocks, and I want to like buy companies and just manipulate and just I would be so wealthy, and then I could sell my tax services. Even if I lost money on my stoinks, I could sell my tax services. And I get rich, bro. I'm so tempted to be evil. I'm thinking about it. Woo! Bitcoin ETF. Oh, yeah, that's an index. That's right. Hello from Greece. Good sir, I am doing your thing tonight. Da-na-na-na-na. Rip Tesla Cat. Yep, Tesla Cat is dead. If you think a stock is going down in value, sell a bear credit spread. Oh, God, what? What? I'm at work. How am I going to do a bear's credit spread? I bet you like your bears, don't you, bussy boy? Your loss is limited. Okay. You can also just go long. I doubt he lost it. Oh, yeah. He made money, bro. Shorting carries great risk and perfect timing is required. Hedge funds and institutions can short because they have the capital to move stocks. I don't think anybody should short. Even a hedge fund. Like, why? What are you doing? Oh, but the hedge funds do it. I don't care. U.S. stocks, VXUS to 0. Any day now. Do evolve.
Hey guys! It's Paul Gabriel here! My daddy's nice!
But yeah, retail shouldn't be shorting any stocks. Will you buy Bitcoin if it replaces the... Is this a joke comment? Is this a real comment from a real person? What if it was Martin Luther King from the grave? 10 to 12 when most of your assets in real estate is huge means liquid net. Yes. He got nuked from... That is a huge loss. Oh, man, if I lost 12% of my net worth right now, I would break down in tears. That is years of saving. Gone. Unbelievable. 10 to 12% is him down. His ego is huge. And he doesn't even show the numbers. Like, I've showed my portfolio multiple times. Okay, it's like 98% VT or like equivalents. And that's my point. It's always been that way. These people, you don't know what they're freaking doing. They're buying this and selling that and hiding this and doing that. It's ridiculous. Wasn't one of Small's Mergy Fund replacements to declare bank? Yeah, just go bankrupt, bro. 10 to 12% is like, Strongman, you should challenge him. Oh, man. You think Jeremy got crushed? Paul Gabriel would have got nuked from orbit. Conventional wisdom is this guy's downfall. It hasn't made him any money. Hell, I've outperformed this guy easily. I'm sure you have, monkey. Let's see. Bro is not a long-term investor. Yeah, even if you guys make money on your stocks, most of you sell. Okay, and even I get tempted to do that. Like, I bought some individual stocks. Some of them went up like 20, 30%. I'm like, whatever, I'm selling it. And it's like hard. I'd rather just buy an index because I never sell. I never sell VT. It is unacceptable to sell VT. It is against the freaking law. Ever. This guy is a yapper. Well, I'm a YouTuber. What am I supposed to do? Sit here? Why would you listen to this EM guy? He looks like a circus performer. Because he's rich, bro. I'm getting destroyed by Tesla. I'm investing in knee pads. I've gone through so many knee pads, bro. Ooh. Paul said about a year or two ago, markets would tank 50% and were overvalued. Well, heck, markets have... There's this thing called efficient markets, okay? A lot of people make the mistake of they look at the market and they say, it's overvalued. It went up a lot. What's going on here? The prices of the market reflect the collective wisdom of all the market participants. And a lot of the times, the market's right. Just let it go. And if there is a bubble, it will pop. But if you're a long-term investor and you're DCAing, you should not fear a bubble at all. I don't care if we're in a bubble. If VT goes to $50 over the next couple of years, I will continue to buy and buy and buy and buy. And it won't bother me in the slightest. Because long-term investing, that's how you make your money, is by buying and staying the course in times of fear. That's it. And then you get rewarded during bull markets. If we go into a massive bull market, which is possible, VT goes to 130, 140 over the next 5, 10 years. That's a decent amount of money. I'm doing pretty good. Let's see. Yeah, see, and like even when he wins, he sells too early. Like, just buy the index. It's so tempting to sell individual stocks. I get that too. I understand that. Because you're like, oh, I made 30% a year. It's like better than VT. But it's probably not a good idea. I'm a stunk analyzer. Jeremy had a banger video today. Oh, God. I'm sure he did. Let's see. What's your thoughts on losing the foreign tax credit because of VT? A big debate. Is the VT because the expense ratio? Well, I still say you should stick with VT because you get the foreign tax credit if more than 50, I think it's 50% or more of the fund is international. So right now it's like 61, 62, 39, 38. If it ever goes to 50-50, you'll start getting the foreign tax credit, number one. And number two, it's the behavioral aspect. By owning VT, you're not tempted to reallocate between VTI and VXUS. It's one fund, you buy it, and you're not going to shift your allocation because you can't, because it's one fund. If you have VTI and VXUS, you might be tempted, well, U.S. stocks went up, so I'm going to put more into those. And then that's how you underperform in the long run, is chasing performance. That's my thoughts.
But theoretically, yes, you could save a little bit of money.
But there's also a behavioral aspect to investing. Let's see. Why do you think everything is a scam? It seems like there is so many grifters. Because there are grifters. The whole finance industry is dirty. Let's see. Hedge funds. Hell, hedge funds are losers.
I work for a hedge fund, bro. Yeah, bro, I don't beat the market, bro. Give me 2%, bro. Bro, a hedge fund, bro. Finance. Yeah, bro.
Freaking losers.
Brooklyn truck stops talking. Oh, no. I'm going to delete my channel now.
There's only one great. You have Sprouts and Farmers.
Yeah, he buys like 50 stocks and one goes up. Oh, good job.
You're wrong about Bitcoin. Okay. Strongman, what is your current net worth? Before the Nvidia short or after? I can't reveal my net worth. I don't want to get robbed. He lost his shirt in large cap tech. It's VT from here on out. I've never had a shirt, people. Who remembers Clown Jerry making fun of Tesla and he would never buy because it was a gamble? Who remembers Clown Jeremy? Are you calling me Clown Jeremy? Okay. Stop looking at Bitcoin from the point of view of a stock. If you continue to do that, I don't think Bitcoin's a stock. I never said Bitcoin was a stock. It's a fundamentally worthless clown token. It is, it was, it is, and always will be. Honest, my honest. I need to cover that too. I read your book and have a clue now. I do have a fun account I'm ashamed of. My 403b index fund is primary catalyst. There you go. You know you want to have your clown account. Nothing wrong with that. Couple percentage, play around, do whatever you want. Don't short, but play around, buy crypto, buy clown stocks, whatever you want to freaking do. That's fine. But the vast, vast, vast majority of your net worth should be in tax advantage accounts, in total market index funds that you never sell. So hard. I'm glad he lost money. We made money by holding ET. I know, but VT is just doing so poorly this last year. Oh, man. I've lost everything. Bitcoin is dumb. I agree. Bitcoin was down 4% and up 7%. Buying some bread tomorrow morning with my crypto. Jeremy's got, we all got kids to feed. Doesn't mean you can be a scammer. All right, guys, that's it. Everything money's a scam. I just wanted to react. I guess we didn't see the dollar amount, but that was a live reaction. I had not seen that video beforehand. All right, have a wonderful day. Cheers.
I'm Paul. I'm a value investor. Return on equity is assets minus liabilities. A lot of
Oops.
this conservatives get. Stock is currently at 182. The low price is still higher than the current price. I'm a buyer.
Oops.
I'm Paul. I'm a value investor. But the real true investor is the one that does well during a bad time. I have BABA, Carnival Cruise Line, Farmers Bank, HPQ, Intel, Facebook, Miller Knoll, Sleep Number, Smith & Wesson, Steelcase, GDX, GDXJ, and Walgreens.
Oops.
I don't pay attention.
So you never know who's naked, and I rarely say too hard.
I think my dad